If you have ever wondered how traders find high probability entry points on the chart, supply and demand is one of the most powerful concepts to understand. In this video, I'm going to break down what supply and demand zones are, how to identify them, and how you can use them for clean entries and targets in your trading, keeping it simple and practical. Firstly, what is supply and demand? Supply and demand are zones on a chart where impulsive buying or selling has taken place. The theory is that when price returns to these zones, we expect a reaction because we have seen that the price the zone is at has been seen as a good price by traders to buy or sell from. You can think of it as a discounted price or a premium price area. If the market returns to a demand zone, traders will see it as a discounted price to buy from. And if price returns to a supply zone, traders will see it as a premium price to sell from. So we use these zones to enter from in hopes that they will provide another reaction. Now, a demand zone is what we use to buy from, and a supply zone is what we use to sell from. So how do we identify these zones? First, you want to look for an impulsive move and look at where it began. I like to use the last candle before the impulse for my zones. Ideally, it's an indecision candle like this because it signals a stall before the market makes its move. So I just take this rectangle tool, mark off the candle, cover the high, and that is my zone. Now you want to use the zones that are untested. The way to check if zones are untested is simply to see if any wicks has driven into it. Untested zones can also be referred to as imbalanced zones. I will cover imbalances in a separate video, but for now it's important that you know what it is. An imbalance is an open price range that has not yet been filled. When we get an impulsive move with no pullbacks like this, the market leaves open what we call an imbalance. Now we expect this imbalance to be filled at some point, and because of that we can use them for entries as well as targets. So in this case, the imbalance was filled when we had this run up, filling the supply and selling off. The way we want to use these zones is going to be in line with the trend. So the first step is to determine the direction of the market. In this case, we are in a downtrend, printing these lower lows and lower highs. So in this case, we want to sell. After identifying the trend, then we identify the current leg of price action, which will be from this high to this low. Then we identify our imbalanced supply zone, which will be this last candle before the impulse. From here, we have our trade prepped. We can have our entry at the low of the zone, put our stop loss above the zone, and simply target the next swing low. Now, this is the simplest approach and use of supply and demand, and there is no need to overcomplicate it. We have a run up, tap in of the zone, and then we make our run down, creating a new lower low. Simple as that. Sometimes we have multiple zones to work with. When we have multiple zones like this, we also have multiple options. Now, we could simply just use the extreme zone every time if that is something you wish to do, but it can result in missed opportunities. For clarification, the extreme zone is going to be the last zone within the current leg of price action. So in this case, it will be this last bottom zone. So mainly I will focus on the extreme zone and leave this order there, but we also have the possibility of getting reactions from this zone. So what we do here is we look for what I call a conformational shift. So let's say the substructure here is making lower highs and lower lows. Then we simply wait for a break of structure within the substructure to confirm the upside. Now, if you don't get that, which we didn't in this case, we simply wait for the extreme zone to be filled, and that is where we will take our trade. In simple terms, supply and demand is all about identifying key zones where strong buying or selling has previously occurred, and using those areas to anticipate future reactions. By focusing on untested imbalanced zones and aligning your trades with the overall trend, you put the probabilities in your favor. Demand zones are for buying, supply zones are for selling, but only when they match the direction of the market. Keep it simple. Identify the trend, mark your zones, and use them for clear entries and targets. Avoid trading against the trend and don't overcomplicate the process. Consistency comes from sticking to these core principles.